Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host here at AlgoBot, and today we're studying an expert advisor called Pivot Engulfing Hedge. This is a pure price action approach. No moving averages, no oscillators, just candles and levels. Over the next few minutes, you'll learn how it combines floor pivots, the engulfing candle pattern, a momentum breakout, and a managed hedge that steps in when a breakout proves false. Remember, this is educational analysis only and not financial advice. Let's dig in. So what exactly does Pivot Engulfing Hedge do? At its core, this expert advisor watches a single chart and trades pure price action. It builds a small grid of floor pivot levels, then waits for a specific candlestick pattern, the engulfing candle, to close decisively through one of those levels. That combination is the heart of the strategy. Here's the thinking behind it. Floor pivots are reference levels that many intraday traders watch and defend. The expert advisor recomputes them on every closed bar. Over the last 24 closed bars, by default, it takes the highest high, the lowest low, and the most recent close, and from those it derives a central pivot point along with a support and a resistance level around it. The distance between the high and the low, the pivot range, is then used to size every buffer in the system, so the strategy scales to any symbol or time frame without hard-coded pip values. When a full-bodied engulfing candle closes clearly through one of those pivots, it suggests that one side of the market has overwhelmed the other right at a level everyone is watching. Rather than fading that move, this strategy trades with it, buying an upside break and selling a downside break. The signature feature is the hedge. Breakouts often fail, snapping back and trapping traders who chase them. When that happens, instead of simply absorbing the loss, the expert advisor opens an opposite, locked leg designed to ride the reversal. The whole basket of trades is then closed once net floating profit reaches a set target. This style suits traders who are curious about price action systems, pivot levels, and hedging mechanics on liquid markets like major currency pairs or gold, on time frames such as 5, 15, or 30 minutes. As always, this is educational information, not a recommendation, and trading carries real risk of loss. Let's walk through the mechanics step by step. Everything begins with the pivots. On each newly closed bar, the strategy scans the last 24 closed bars and records the highest high, the lowest low, and the latest close. From these, it calculates the central pivot point, which is simply the average of those three values, and then a resistance level above it and a support level below it. These three lines form the grid the expert advisor trades around. Next comes the entry. The strategy only looks for new trades when it is completely flat, with no open positions. It examines the candle that just closed and the one before it to check for an engulfing pattern. For a long setup, the strategy detects a bullish engulfing candle. The just closed candle is bullish, and its body fully covers the prior bearish candle's body. On top of that, the previous close had to be sitting at or below one of the pivot levels, while this candle closes clearly above it, beyond a small confirmation buffer. That buffer is a fraction of the pivot range, set by the break parameter. The engulfing body must also be at least 1.1 times the size of the prior body, which filters out weak, indecisive candles. When all of that lines up, the expert advisor opens a buy. The short setup is the mirror image. The strategy detects a bearish engulfing candle whose body covers the prior bullish candle, where the previous close sat at or above a pivot, and this candle closes clearly below it. When confirmed, the expert advisor opens a sell. Now the exits. Each base trade is given a stop loss and a take profit. The take profit is a reward multiple scalp away from entry, defined by the reward fraction. The stop loss is placed deliberately beyond the hedge level, so that the hedge engages first if price turns against the trade. And that brings us to the hedge. While a single base leg is open, if price travels back across the broken pivot by the hedge fraction, the breakout is judged false, and the expert advisor opens an opposite, locked leg to ride the snapback. From that point, exits are governed by the basket. Once net floating profit across all legs reaches the basket profit target, everything is closed. If net floating loss reaches the basket loss limit instead, the expert advisor flattens everything as a hard ceiling on risk. Let's look at the actual MetaTrader 5 code on screen. At the top are the input parameters you can adjust in the strategy tester or on a live chart. PivotLookback, set to 24, controls how many closed bars define the pivots. HedgeFrac is the confirmation buffer beyond a pivot. EngulfRatio, at 1.1, sets how much larger the engulfing body must be than the prior body. HedgeFrac defines the pullback that deploys the hedge, while StopFrac and RewardFrac shape the base stop and the target. Basket TP money and basket SL money are the net floating profit and loss limits for the whole basket. And there's also a maximum spread filter, the lot size, and a magic number. Below the inputs is the long block. The Boolean bull engulf is true when the closed candle is bullish, the prior candle is bearish, the current body engulfs the prior body, and the body is at least the engulf ratio times the previous one. When that's true, and the previous close was at or below the level while the current close is above it plus the tolerance, the strategy computes the hedge level, the stop loss below it, and the take profit above entry, then calls trade.buy. The short block is the exact mirror. Bear engulf checks for a bearish candle engulfing a prior bullish one. When the previous close was at or above the level and the current close is below it minus the tolerance, the strategy sets the hedge level, the stop loss above it, and the take profit below entry, then calls trade.sell. Both sides share the same structure, only the direction flips. That symmetry is what keeps the logic clean and easy to audit. Now let's bring it all together on the chart. What you're seeing is an illustration on a euro-dollar style chart, with two horizontal dashed lines marking the floor pivots, a lower floor pivot and an upper pivot above it. Watch how price interacts with these levels. On the left, price is drifting just beneath the lower floor pivot. The first couple of candles are small and indecisive, hovering below the level without committing. Then a clearly bearish candle prints, closing lower and sitting comfortably below the pivot. This is the prior candle the strategy will measure against. At this moment, the previous close is below the pivot, exactly the condition the long setup needs as its starting point. Then comes the key candle. The very next bar opens near the prior candle's low and rallies, closing well above the prior candle's open. Its body completely engulfs the previous bearish body. That's a bullish engulfing pattern. Crucially, this candle doesn't just engulf. It closes clearly above the floor pivot, beyond the confirmation buffer. Both conditions are satisfied at once. A bullish engulfing and a clean breakup through the level. That's where you see the buy entry marker appear. The strategy reads this as one side overwhelming the other right at a watched level, a genuine momentum break. From there, follow the next few candles. Price holds above the pivot and pushes steadily higher, candle after candle, each one building on the last. The breakout is following through rather than snapping back, which is exactly the scenario the base long trade is designed for. As price reaches the take profit target above, you see the take profit marker. In the live logic, this is the reward fraction scalp, and the basket profit target would also bank a move like this once net floating profit is sufficiently positive. Now keep watching, because the chart flips to the short side. After the long trade closes, price pushes up to the upper pivot and even pokes above it. A strong bullish candle closes above that upper level. This becomes the prior candle for the short setup, with the previous close sitting above the pivot. Then the mirror image plays out. The next candle opens near the prior high and sells off, closing well below the prior candle's open and engulfing its entire body. That's a bearish engulfing pattern, and it closes clearly below the upper pivot, beyond the confirmation buffer. Both short conditions are met, and the sell entry marker appears. Price had pushed above the level, failed to hold, and reversed, a downside momentum break. From there, price slides lower, candle by candle, working its way down away from the pivot. Each bearish candle confirms the move, and when price reaches the lower take profit target, the second take profit marker appears. Now, here's the part the chart doesn't show, but is worth picturing. Suppose that after either entry, price had immediately snapped back across the broken pivot instead of following through. That pullback, by the hedge fraction of the range, is what the strategy treats as a false break. At that point, the expert advisor would deploy an opposite, locked hedge leg designed to ride the reversal, and the basket profit and loss limits would manage the pair from there. So the chart shows the clean, follow-through case, while the hedge is the built-in answer for when a break fails. Notice that no part of this relies on an oscillator or a moving average. It is purely candles and pivot levels, with the parameters, like the 24-bar lookback and the 1-to-1 reward fraction, doing the rest. To recap, Pivot Engulfing Hedge is a pure price action expert advisor that builds floor pivots, waits for an engulfing candle to close through one of them, and trades that breakout. Long on an upside break, short on a downside break. When a break fails, its signature hedge steps in to ride the reversal, and the whole basket is managed by net floating profit and loss targets. We looked at the logic, the code, and a chart illustration of both a long and a short trade. Everything here is educational information only, and not financial advice, a recommendation, or a solicitation to trade. If you found this helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MetaTrader 5 breakdowns. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.